All right, so I want to take a minute to help you better understand how to manage your options once you're in a position. So we got to put in perspective what we're doing here. When you decide you want to make profit from options, you have a choice to make. Do you want to be the buyer or do you want to be the seller? I've kind of perfected my technique and I'm really comfortable being the seller on the seller side of the options trading. I may at some point get into the buying side, but right now my sweet spot is selling options. So nothing's changed. You still have a two-sided transaction. You have to either, when you put up to sell, somebody has to put in a buy order to purchase your option from you. And you'll never know who that person is. But the point is, when you come into the for trading and you look through all the available options, expiration and strike prices, you can pick one, and by right clicking sell or buy, you're choosing what side of the trade you want to be on. So if you look at my screen, every last transaction I've done for the last 60 days, these are all being a seller, and I start the trade. And when you get into a position where you've gone through the act of coming in here and picking to what I do, credit spreads, so, or vertical spreads. There's, see right here, it's called short, put, vertical, and of course you can toggle between call and puts. But always remember, on the right side is the puts, and on the left side are the calls. But I'm choosing to be the seller of puts. So by doing this act, and you see it gives you, based on market conditions, volatility, the data, they've already done the math and they've calculated a fair price, midpoint price for this option I selected. Now I'm really close to the money, so you see it's $1.87, so it's $187 if I'll do it right now. And don't worry about the mechanics of picking. That's a whole nother session. But what to keep in mind is, by me picking this is, think of it as a sell limit order. Like, I'm only willing to sell it at this price, and this is the midpoint. And then on the left side, this is the natural price. So you see, this is the mid between this and the max, which is 210. So you see 210 here, 160 here, and then the mid of these two numbers is what you see here. So you always try to get the mid, but you're never going to get the mid. It's very rare. So you probably have to go down. But my point is, by clicking this button, that puts you an order out on the market, and that's a limit for what you're willing to sell it for. And of course, somewhere in the world, somebody picked on the buy side, picked the exact same option, but they chose buy. And on their screen, they'll have a number that they want to pay for it, or a buy limit. So when it gets filled, you end up getting over here, active. And there's different statuses of orders that's here. And I'm showing you all of my working and filled. When it's working, that's when you click the send button, and you're waiting for somebody who put in a buy limit to pick it up. And of course, if it's sitting here, you probably have your limit price too high, and the mid is representative of what the market looks like. So you might want to come down on your order to get filled. But when it does, you get this list. It shows up in this list. So if you fast forward to today's video is about, I have some orders in position. So if I could show you my Tesla play. I don't have anything else right now going on. But currently, if you look here, I have a portfolio of positions currently open. So remember, there's two steps to when you're doing a trade. You have the entry and the exit, always. Now let's talk about options. It's a little bit different than stocks. In options, when you enter, you've done everything I just showed you. And now when you're in a position, you now have to look for your exit. Now, every option that you go into a position have an expiration date. And that's what matters. That is the option one of how to get out of the option, is at expiration, as long as it's, in this case, out of the money because we're the seller, as long as we're out of the money because we're the seller, these will just expire. So for example, you see here, I have one that expires this week. So I'm keeping close eye on this one because my theta should drain it out. My theta right here, like if you see here, I'm draining down about the difference between these two. So that's about what, maybe $2.3 a day of value out of this option. And when it drains completely out, the only thing left would be the price value, which as long as it's above 720, which it is, because Tesla's currently trading at 878, I will have no problem getting this to expire. So let's go back to how do you get out of close your position or to exit your position. I could do absolutely nothing. And on February 5th, which will be this Friday, yes, when the market closes at 4 o'clock, this will be out of the money, and then come on February the 8th, it will just disappear off my list. It will just disappear, like out of my positions. It will still be here, but as far as open positions, it's done. All right. Now let's talk about option number 2. Option number 2, it says you can pay your way to exit as well. So for example, on this option, if you go to activity, February 5th, let me scroll down, find it. It's way down here. I rolled and got it looks like $113 off this in premium off of this one. So that's a pretty good premium. But that's credit. That's premium. So they put that in my account. So if you look here at my activity at the top, you see working. So think of this as a limit order. Because remember, when I originally did this, because I'm the seller, I put in a sell limit order to get filled, and they got filled. Now I'm putting in a buy limit order, which that's why you see it in red. DB stands for debit. All these others are credits. But you notice that this particular one says debit. That means they're going to take $1 back from my account. And the price is what I'm willing to pay to get to exit my position. And once again, there's 2 ways to exit options. You either A, let it expire on its expiration date, which in this case is February 5th, which is coming up, or you can get out early when this thing's out of the money. But you can't get out early for nothing. You got to pay something back. So the goal is, as a seller, the strategy is you buy a option that has lots of value, lots of risk, well, the perception of risk, and then you buy the exact same option spread at a later date where it's almost worthless. And the difference between the two are your profits. Just like if you were to buy a stock at $100 a share, and you buy it at 100, you buy 2 of them, and then it goes to 150 when you sell it. The difference between 100 and 150 is your profit margin. So same thing here. The only difference is you get your profits up front, and then to get out of it early, it's going to cost you. So the goal is you want to get out cheap. That's why you can put in a buy limit order the same day you open it, because the first day is going to have tons of value, intrinsic value and extrinsic value. So there's no way in hell it's going to get filled at $1. So I like to go ahead and just put these in, because that puts my order in autopilot, and I can watch as it plays out where I'm at as far as any existing value and what I'm trying to get out. So as you see, this one's been around since I think I did this order. I rolled it back on the 12th. So the 12th of January. And, it's been, when I first did, it was like $110. It took forever. But the closer you get to expiration, the quicker theta decay kicks in. And as you see, with 2 factors of Tesla going up and time on my side, I now can get this thing for next to nothing. So I can close the position. Now, this one, I don't want it to expire because I have around $500 of capital tied up into this one. I don't want the money back right now. I rather send it back out to make me more money. So there's a concept called rolling that you get when you do option trading. So by doing this, you just go back over and you see I have them highlighted. I mean unhighlighted. So when you click it, toggles it from selected and not selected. And if I select these and right click, you see I get this option called roll. Well, good, look, rolls are great. They give you a way to extend your option to have more time, and because by you doing that, it now becomes in value, and that opens up more risk, which means you can get more credit. And they'll take no more collateral from me. They already got 500. They're not going to take another 5. They'll just pay me more premium. So this is a concept called rolling. So okay, so these two options, the quick roll, all three of these are the same thing. They're just a convenient, easy way to kind of roll and get more things. And there's ways of doing it by hand. I'm probably going to do this one a mixture of by hand and by the tooling. But rolling does two things. It closes out the position. It's kind of like if you want to go trade in a car, right? You got to take care of the old car before you get a new car. So same thing here. What rolling does, it closes out the current position and gets a new one all in one order, which is pretty cool. It's called a four-way. All right, so I said a lot, but let's kind of, before I do this, I want to shop around. So I got a little time. The market might spike on me and it'll close it out for me because I have an order in, but I'm going to leave it here because ideally I want to pay $1. I'll pay $3 if I can find a good premium deal. So let's look around, let's shop around. So I'm gonna come here and just do like I normally do, and I'm gonna do my research, and I'm gonna find a sweet spot for premium. All right, so let's check out a quick eyeballing. Typically, I like to do a couple weeks from today. So today's the 2nd. So if I were to look for some opportunity, I'll first look at what's some numbers we can look at. So couple weeks maybe. So maybe 31 days will be March 5th. So maybe start hunting around March 5th maybe, or maybe like March the I'm thinking let's just look at March 12th. Let's look at March 12th, see if we can find something here that's gonna work out for us. Let's see. So yeah, they don't even have any. This won't work. They don't have any less than 800 strikes. So that's not gonna work. Can't do that one. Maybe February 26th. This is 24 day. Okay, this is a good one. Let's try it. Let's start maybe like right in here maybe. Yeah, so that already is terrible. 50 is not what I'm looking for. Well, you see the numbers like, well, let's just see if we can find some good premium first. Sheesh, this is terrible. Okay, so that obviously 800 is not what we want. Yeah, I don't know if I like this. All right, so this is looking decent. This is like 98. 98 at 177.5. That doesn't sound bad. Premium's decent. 73% is lower than I would want. But you know, my buying power will go down about $395. Let me see what Thinkorswim agrees. So Feb 26. Let's see. So if I look here, Feb 26 is showing 126 points. All right, so 126 looks like Feb 26. Yeah, Feb 26, 126 is what they're projecting. So if you look at the current price is 878 minus 126. Yes, that's right at 752. So 752. Yeah, so as you see, that's already 752 is, so we gotta move this up, man. Oh, that's good. Premium's decent. 750. We gotta go a little bit more. So 75 bucks. Okay. Oh, okay. This might be okay. I'm going a little lower. No, should go away. Shit, we getting the same. Go away. Still 75. Oh, $1.05. Wow, that went backwards. $1.05 now. Yeah, I like this. It's 80%, man. See if I can feel this. 147. Yeah, that looks good. We'll go for it. So it's like 7.5, 7, say 6. So this is going to reduce my buying power by 6. Okay, I gotta be really careful. Well, I gotta roll anyway. I'm not gonna. This is an idea for a roll. All right, let's see. This is something worth doing. So yeah, so you see, we kind of took notes here for a potential roll. A potential roll. This is 7.5 points. This is. Let me try one more thing. I wonder if I move this up, like what will this do? That's still 70. Okay, let's see. This is. All right, this is better. Yeah, it's not worth making that huge strike. This is 70. All right, so I like this one. So 226. 226. Selling the. I'm just taking a note. I'm just taking a quick note. Selling the 745 and buying the 740. So as you see here, just so you can see, I just took a quick note because when you roll, you want to compare. So I like this expiration. So $7 preferential profit. Pops 80%, which I like. That's not mean. I mean, that's not ideal, but it's not bad. If we look, remember we told you for the 26, the numbers 126 points. So I like to, calculate it. 126 from current price. So I'm in a sweet spot. They're saying don't, at least 151. We're getting 145, so that's a good deal. 8% pop, 70% profit margin. I normally like 90, but I think I don't want to push my luck. So let's see if I roll this, what I can get now. Can I still get it? So I'm gonna go back to my positions. I'm gonna cancel my order to do a buy on it, so I can try to roll it. So I cancel that out, and now I got my, once again I have to highlight my positions. So I'm highlighting, and I want to roll it. It's still this value is going down, so I'm gonna roll it. So go here. So normally you would close it. I don't want to do that. I can show you real quick. Close this. This is how I got to that buy order. See, it's still 03. You would just change it to. So that's one way. If I want to just exit with a close, but I don't want to do this. I'm fine with the money. They keep the money, and I get more premium. So I'm gonna roll. So I'm gonna do roll. I'm gonna hit roll. Yeah. All right. Here we go. So you see what it does is now if you look down here, it's a 4-way option order. So you see they already did the math to close out the 5th. I just need to tweak this February 12th. So I mean, all I got to do is say more time. And you watch, when I hit this more time, you'll see it's going to change the dates on these two down here. So see how it's changing? So I'm going to go to 26, which is awesome. And then I'm going to pick my strikes. So it's at 715. They're already right here. So I just need to try to move them into what we talked about before, which was 45. Boom. So you see, I'm not getting as much premium because I'm trying to roll. And I don't like that premium. So let me just try a little bit more to tweak this and see if we can get better premium. Yeah. Hold up. There we go. 62. Okay, this is a little bit better. 62 is not bad. Yeah. It's funny how things changed. When I was closer to the money, it got weird. That's weird. It's 5 point. Oh, it's 5 point spread. It's 5. Oh, I don't know. I'm not gonna worry about it. I'm just gonna see if I can find better premium. It looks like the sweet spot's right here. $60. Yeah. So I can get 60 on this, right? Let's deal. Yeah, this is a real good deal actually. $62. Let's get it. Let's see. Wish me luck. Rolling. See if it rolls. See if it fills. It probably won't fill. Let me switch it out. So you see, it's trying to fill. It's close. I'm gonna get 60 and see if I can get 60 on it. Let's see if it fills. It might not fill. Let's play with it. There's weirdest thing. Let's see. All right, got it filled. It filled for so as you see, it filled for 59. So I got $59. And this is called rolling, so I was able to roll and get instead of a February 5th expiration of this Friday, I got pushed it out a couple weeks and I collected another $59, which is great. And if you look here, you see I have zeros now for the February 5th, so there is no more February 5th. Now I have an open order for February 26th, which is great. And that's money in the bank. We're good to go now. Another $59. So if you go to activity, you see I'm now an additional 59. And it's no more trying to close out the other one. Now it's closed out, and I collected more premium off that same money. It didn't take any more money out of my account. The same premium I had before is going to be used, and we are good to go. All right, so next we gotta make things be more autopilot. So even though we did we rolled it and got out of the February 5th 720, we're now rolled and got a 726 740. So we got out of this. Oh, it won't let me click it because there's no order, but we got out of the 720 and we're now in the 740 put. So these are all puts. So when you see -1, that's sell, and a 1 means buy. Now, of course, if you did more than one contract, But this didn't cost me any more capital. It's the same amount of capital on here. So for everything you see here, I have tied up $1,000 of my capital is tied up into these deals. And there's only 2 deals at play right now. I literally rolled that same capital from this one into this one, locked in some more premium, got out early, several days early, and I'm locked in for 720. Great. And earlier I did the same thing for my March 5th. I'm also locked in at 790. But if I can get further back in the money, I try to do that when I can. I don't want to be too close. But different dates, so I have a little flexibility now. But in order to finish this thing out, we still need to put in our exit strategy. So I'm going to close position. And you see how it will cost me $65 to get out of this thing? Well, obviously, it has a value. That's why I collected $65 in premium. The value is still the same. It's only been a few minutes. So I'm going to go ahead and put in an order to handle closing it before February 26th. So what I do is I'll just put the lowest possible number, which is a 01. This is $1. Not, so make sure you don't do stuff like put 01, because that's $10. So let's make sure you have 01. And I'm gonna go ahead and put it in. I'm gonna do it. I'm gonna just make sure you change the TIF to good till cancel and go, and that will get that set up. So now we have something to manage. See? So now you see, I'm willing to buy it back for $1. I don't expect this to get filled no time soon, unless Tesla goes up past 920. There's no getting out of this to roll again no time soon. But we're good. Today's the 2nd, so we got like 24 days. So somewhere in there, we'll just keep monitoring it, but there's nothing else to do. We collected $60 and we'll move on to the next transaction. The only other thing I need to do is I like to keep things in sync, and I use Thinkorswim to kind of manage my trades. So I like to do apples to apples. So same thing here. If I go to my Tesla play, I got several plays in action right now. So I just got to find the one that was for the one I swapped out, which was the 72017. Same thing. So 720. Let's make sure. Positions, and you see I got out of this one, so the 720. So this one. All right. So let's double check the 720, 17. And you see, even on the web, they give an option to roll. So I'm going to roll it. I don't want to close it. I want to roll it. You see, because I'm still in the money. I'm still not in the money. I'm still in the profit strike zone. I know that they don't really show credit well here, so there's no credit. I can click close. You'll see that it shows 3 cents or $3. I don't want to do this. I'm going to delete. But I will. Oh, it's selected. I'll take this off. I just want these two, the sell 720 and the buy 17. So I'm gonna hit roll. You see, it gives me basically to close out is the opposite. So now you see that I'm buying the 720 and selling and that's all it is. To close it out, you just do the exact opposite. So the only difference is I gotta put in my new dates and new strike. Let's see what we get. So same thing. We did the expiration of the 26, so I want to find it. Boom. Same thing for this one, 26. Boom. And then strike price, and I think we're targeting like a 740 for the sell. So there it is, and then the 735 for the buy. So a 5-point spread. So same collateral. See, 5 points, 5 points. They're all puts. And what this does, this is called a four-way option order. It will close the existing option by doing the opposite, and then it will put in an order for the 740, all in one file order. And it'll only fill if let me see, switch these two. Oop, is that right? I'm selling. Hold on, let me just double check, make sure I got my numbers right. So we're doing the 726. We're selling the 740 and buying the 735. All puts. And then we got filled at 59. So we'll just do the same thing over here. Same thing. Try to get the same credit premium. And let's put it in and send. Let's do it one more time. So it closes out they're buying the biggest and selling the smallest. And then on the new order, we're selling the biggest and buying the smallest. That is correct for the 26. Okay. Orders in is working. Let me edit it, try again. Maybe open it up. And review and send. All right, order got filled and we're now good to go. So now, as you see, now have a February 26, 740 and buying the 735. But cool thing is, we now can see representation. So the 26, you see I'm still in the profitable zone. Everything is great. We can look at my other order. So this order right here, I'm still locked into a 770 for February 5th. That's on my Robinhood account. So you see I'm still kind of the equity. So I'm looking at the equity. That shows how much value is left. There's still $4 left in it. I could roll it now. I don't want to. I'll just wait another day because it's February 5th. Today's the 2nd. So maybe tomorrow I'll look and see if I can get some better premium. And then we'll see. I have another one up here. It's SPY. This expires. But you see, what my point is, here's where I centralize everything. Everything I got going on, Robinhood, Tastyworks. I got all the options in one place. So you see, here's my SPY. We're in the profitable zone. And then my Teslas. I have several Tesla plays. So I normally just clear them out. And then you can see, I can look at things. Here's my March 5th. And then I can look at my one I just did with y'all, February 26th. And then I can look at my, yep. And the biggest thing now is, if you notice there's a theme here, there's a lot of Tesla. So I just look at my closest to the money strike price, which if you look at my numbers here, we got selling the 770, we're selling the 740 and 790, and like saying it out loud, you see the closest one is 790. So from there, it's just a matter of from a stock management strategy. I just kind of looked over here, and you see I put some alerts in at about 805, 808, and that gives me plenty of notification before it gets in my area that I care about, which is like right in here. I want to get alerts and stuff to know. But yeah, I mean, that's really it. That's rolling, and I touched on closing. So if you have any questions, let me know.